One of the reasons why I thought that this was a short-term bottom was because of a couple factors. Number one, the obvious one is that we pierced the 2017 highs, right? So just naturally, that's going to be a massive level where people are saying, okay, maybe this is the low in the charts. Yeah, so I think what we'll see is as oil comes down, as the economy and the global economy, continues to kind of slow down, that will bring inflation down from the 8 to 9% that we're currently seeing. It'll bring it back to that 4 to 5%. But the problem is going to be is that as we slip into recession, unemployment naturally goes up. And if it gets too high, then the Fed will be triggered into kind of bringing it back down via printing money or lowering interest rates again, which then is going to nudge up the inflation again, right? So every time you stimulate, it's going to nudge that inflation up again. And let's say it goes to 5, 6, 7%. And then obviously that stimulates the economy, which brings down unemployment. And then the longer term is just going to be higher and higher. So what I mean by that is, let's say this time around, inflation kind of comes back to 4 to 5%. The next time they print and it spikes to 10% in terms of inflation, my guess is it comes back to maybe 6%. And then you keep on having this thing where it just keeps on going up and up and up, where they eventually cannot keep up with it and cannot just stimulate our way out of this. And that's where you get that reset. So yeah, I think longer term, you're going to have higher and higher inflation, but you'll have these periods where it pulls back as the Fed kind of pulls back on spending and stimulus. So I think that the 4-year cycle has proved itself once again in that, 2009 creation, 2013 highs, 2017, now 2021 was the last high. So as of now, all we have as technical, traders is to say that, okay, 4 years is what the cycle is, which kind of dictates that we should bottom out. Usually Bitcoin past cycles has bottomed out in that first year, that 12-month period. And then it kind of has a choppy period for about 6 months afterwards, before the next bull run starts. So, we're not at a year yet. So it still tells you that there could be some more downside. And then even after a year, you have to figure 6 months of choppiness before that next bull run. Now, my only fear, and this is kind of the unknown, and listen, no one knows this, is that this is the first period of Bitcoin where the Fed is aggressively tightening and you're seeing this kind of, inflationary pressure forcing them to tighten and keeping them from printing at this point. So that's the unknown. And honestly, I'm not sure. Does that mean that the bear market in cryptocurrencies will last longer? It might. And again, and I wish I knew the answer to that. All we can go by is kind of past cycles, which are not necessarily totally applicable. But I will say this, is that as we get into, so wherever Bitcoin bottoms out, whether it's 17.5 where it was, or 12 or 10 or 5, or who knows where, I do think the next bull run will be the big one. And I know that sounds crazy because we've already seen big runs in Bitcoin, but my guess is when the market starts recognizing that the Fed is going to kind of do this whack-a-mole with unemployment and then inflation and then unemployment and inflation back and forth, there's no good end to this. And that's where Bitcoin is going to be, that next big bull run that easily takes us north of 65 and maybe 100, even a 250 or 500,000 per coin. Now, again, I think by this point, a lot of the alts are gone. You probably have a standard kind of maybe 50 cryptos that are now surviving. The top couple will be the blue chips like an Apple or a Microsoft type play. Those would be Bitcoin and Ethereum. And then we'll have to see how it all plays out after that. But I do think the next run is going to be the run of mass adoption, where the public starts to recognize the end game for the US dollar and really for central banks around the world that are just doing this and repetitively printing every time we get into this mess. That's what I do think. I do think people will look at that. Now, partially they'll look at gold as well. I do like gold here as well. I think gold is kind of, it's the grandfather or the grandmother of safety assets, while cryptocurrency is the 13-year-old, being Bitcoin's only 13 years old. So you look at which one's stable. I mean, here you have gold, which has basically held its value in 2022 while Bitcoin's collapsed, the stock market's collapsed. And that's kind of the old wise player versus Bitcoin, which is just like all over the map collapsing because 13-year-olds are irrational, right? It's still an irrational market where people are still trying to figure out the true value. But I think if you get a couple good things in the crypto markets over the next couple years, like some positive regulation, and then you start to see what I'm predicting in terms of the Federal Reserve and how things are going to be handled, that I do think you will get more and more mass adoption in crypto, and it will be an amazing asset going forward. Yeah, absolutely. So just talking about the 25,000, maybe 28,000 target, let's do some technical analysis work here. So one of the reasons why I thought that this was a short-term bottom was because of a couple factors. Number one, the obvious one is that we pierced the 2017 highs, right? So just naturally, that's going to be a massive level where people are saying, okay, maybe this is the low in the charts. But more importantly, you see this down candle here, and then look at how we broke below and we closed below that 2017 high, but very, very quickly we reversed right back up. That's what we call a bullish reversal candle. So in technical analysis, that's a positive. Now you're just going sideways here. And one of the things I'm paying attention to is the stock market, because it also can be a leading indicator of risk on. So if you think about the risk levels, people in general will say to you, okay, you know, gold is the least risky, you know, then let's just skip over some assets. But then you get to the stock market, the S&P stocks are kind of the next level, then tech stocks are the next level of risk, and then Bitcoin is like the highest level of risk, right? I mean, when you see 80-85% corrections in bear market, that's high risk. So we've seen now the stock market starting to catch a bid. Assuming that holds, it's telling us that people are coming back to risk. At some point, they will finally take a stab and say, okay, we've made money in the NASDAQ. Now is the turn to make money in crypto. And I think that's where you get this push up. A couple other things to note here that are just really kind of cool. Oh, there's no doubt about it. But again, I think it's important to look at it and say, you know, where are people investing it in, right? So, you know, now you have a majority, and this is kind of crazy, but a majority of holders, I think something like 70% of Bitcoin holders are now underwater significantly. So again, you know, that kind of, for them, it's obviously feeling pretty risky at this point. Even though, yes, I mean, Bitcoin in 2009 was pennies versus where it currently sits. So it's been an incredible, incredible mover, which to me, it bodes very, very well for the long-term survival of it, you know, that type of thing. But I still think if you compare the NASDAQ, for instance, to Bitcoin, obviously the NASDAQ's not dropping 85% every 4 years. So I'm just trying to compare apples to apples in that respect.
And I appreciate that. I do.
Yeah. So let me just show you guys this. So if you see this drop here, this kind of vertical move, if you take that distance here to this low, which was the Terra Luna collapse, that distance is about $14,000 on Bitcoin from this high to this low. And then if you look at this sideways consolidation and you take this high right here to the low down here, this is also $14,000. In the world of trading, we call that a measured move, and it usually denotes a short-term low because you've kind of completed the equal distance of the move. So just little cool things like that, how the symmetry of the charts shows up. So those are little factors that I'm looking at which are positive for Bitcoin, at least in the next few weeks, maybe next month. And then really in terms of resistance, if we do get a bounce, you have to respect this low right here. This 25 and change low, that's going to be resistance. And if you continue up, this is really, I mean, look at all this choppiness right here.
And
if
like
price comes up underneath, that's going to be significant resistance. So I would say this is my low end target in the near term here, and this would be my high end target. At which point, you know, I'm still in the camp that we probably do have more downside, just because I don't think we've seen full out despair. People are upset, they're hurting, it's horrible. And let me just say this, is that when I made the call for 20,000 Bitcoin in last October, November, you know, by no means do I hate Bitcoin. In fact, I love Bitcoin. But as a technical trader, my job is not to love or hate anything. It's to be a neutral party where the chart dictates what I do. And that's what it is. It's like, you know, when it bottoms out, I'm going to be all in, you know, not all in one asset, but I will be fully invested with my diversified portfolio in cryptocurrencies. But the chart has to tell me that first. And I think that's an important distinction because it takes emotion out. And emotion is the worst thing for investors. It makes you do the wrong thing at the wrong time almost always.